When are mortgage rates finally going to come down? Everybody's waiting for 5%. Some people are even waiting for 4%. But here's what you need to understand. The Federal Reserve does not directly control your 30-year mortgage rates. One of the most important numbers to watch is the 10-year US Treasury. Today it's around the mid to upper 4% range. During COVID, it actually dropped below 1%. Why? The economy was shutting down, there was tremendous uncertainty, and investors were looking for safety. Today is completely different. Inflation matters, employment matters, the Federal Reserve matters. But there is something else we don't talk about enough. Investors have choices. They can buy treasuries, stocks, corporate bonds, real estate, or invest in private companies. And look at AI. Hundreds of billions of dollars are being invested in AI, chips, data centers, energy, and infrastructures. I am not saying AI controls treasury rate, but it's a perfect example of enormous competition for capital happening today. Meanwhile, the US government continues borrowing tremendous amounts of money, and treasury debt needs buyers. Now imagine the opposite. The economy slows significantly, corporate profits decline, stocks become riskier, private investors slows. Maybe someday the AI boom will cool dramatically. Investors become afraid. Now instead of chasing returns, they look for safety. And historically, one of the places investors go for safety is US Treasuries. More demand for Treasury can push Treasury yield lower. And lower Treasury yield can help bring mortgage rates down. So when does this happen? Next year, 3 years, 5 years, 10 years? Nobody knows. Could the AI boom continue for another 10 years? Absolutely. Could an unexpected economic crisis change everything tomorrow? Absolutely. That's exactly my point. When somebody tells you, don't buy, just wait, mortgage rates are going back to 5%. My question is, based on what? Rates could certainly improve, but if you're waiting specifically for a 3% or 4% mortgage rate, you could be waiting for years. So instead of trying to predict the unpredictable, focus on what you can control: the purchase price, the monthly payment, seller credits, and the financing. Make sure the payments work for you today. And if rates eventually come down substantially, great, we'll refinance.